Hello, everyone, and welcome to yet another Market Outlook by SwissBorg. My name is Pietro, and this week we'll be taking a look at new CPI and inflation data that came out and how that data is a little bit misleading, and relating that then back to the bear market we're currently in. We'll then take a macro look at the DeFi space and total value locked by certain blockchains, so the differences between blockchains. And finally, we'll be taking a look at the sports industry and the integration of the sports industry into the blockchain space through various different use cases. To start off this week, we'll be taking a look at misleading data and bear markets. And when we talk about misleading data, I'm specifically referring to CPI data and inflation data. So CPI is very much related to inflation because it's consumer price index. So it shows you how much goods and services as a bundle have increased year on year. So September 2022 compared to September 2021. The problem with this figure, which has also increased month to month since August, problem with this figure is that it's an aggregate bundle of tokens. So it much more applies to a certain part of the population rather than the majority of the population. Because, of course, as you can see there from the chart, energy prices have increased significantly more than, for example, food prices. And overall, CPI is an aggregate figure, but it doesn't really take into account a lot of other factors that some other indices might take into account. So when we look at alternate indices, you can see there from the chart on the right, for example, that the official CPI number, so the increase, consumer price index increase, is very different than if we look at the index, for example, of the Big Mac index or Christmas prices. Now, the Big Mac index might almost seem like a joke to you because, of course, of the name, but it's actually an index that is very, very valuable, that tracks a lot of different factors that would go into, for example, the price of this fast food. But it takes a lot more things into account and is considered sometimes a lot more of a realistic figure compared to just looking at CPI and how they calculate that. The same can be said for year-on-year increases in Christmas prices. You can see that the Big Mac index and the Christmas prices increase has been far higher than the CPI data. Therefore, the misleading nature of this figure, which could be a lot worse than what it's telling us it is at the moment. How does this then relate to bear markets and historically bear markets? So, given already the misleading nature of this figure and the fact that inflation could be a lot worse, and therefore the global economic stability at the moment could be a lot worse, we are actually historically now not even hitting the average period of a bear market. So if you see from the chart or the table there on the bottom, you can see that on average, bear market will have about a year of trading days that are in the negative before eventually hitting a bottom. And on average, that drop is around the 35 to 40%. At the moment in 2022, we are at 195 days trading days in a bear market. We haven't yet reached the bottom, or no clear bottom at least has been reached yet. And at the moment, the drop down, at least looking at the S&P 500, has been of 25%. Therefore, it's possible that we're going to see more trading days in the red before we hit a bottom, especially when data like this comes out that is already negative, but is misleading because it could be even more negative than what it states there. The second interesting aspect I wanted to touch upon this week was an overview of the DeFi space, especially was looking at total value locked in specific blockchains. So Domin does a very good job, of course, week on week to present an overview of the DeFi space in various protocols. And I wanted to give a more macro overview of what is happening in the DeFi space at the moment. So in terms of total value locked, since the drop, since the start of 2022, really, DeFi total value locked has been fluctuating around a certain figure, and that is between the 50 to 55 billion total value locked across all chains. Now you can see from the chart there above that we have been looking for a stabilization period. The same with stock market prices and crypto token prices. The same goes for total value locked in the DeFi space. it's also signaling that we're itching towards a bottom. So we're itching towards a minimum amount in terms of total value locked, and probably in the short to medium term future, an increase again of traction in that DeFi space. If we look, though, chain to chain specific, so we look at the differences between the various blockchains, we can see that still Ethereum is clearly the king, as it is in most aspects across all blockchains, so even in NFTs, for example. But in total value locked in the DeFi space, it's still over 50% in terms of dominance. It's still the king, and it's still the blockchain that attracts the majority of protocols and new platforms on there. Now, second and third are still Tron and the Binance Smart Chain. They've been in these positions really. I mean, the Binance Smart Chain has been at the top of the DeFi space for a very long time now. But Tron has been more since the start of 2022, since the release of its stablecoin USDD, and it's really managed to gain a lot of traction and attract a lot of TVL as well, even with the very limited amount of protocols they have on their blockchain. Now, the most interesting aspect, perhaps, is at the moment the drop of Solana. So I've mentioned in previous market updates that Arbitrum and Optimism were also attracting a lot of TVL. A lot of protocols were launching either exclusively or partly on those two blockchains. But it's actually Solana that is the one that has slowly been losing both TVL and positions in terms of the blockchain space. Now we see it almost itching outside of the top 10 in terms of TVL. It'll be interesting to follow what happens with Solana, and especially how much more traction Arbitrum and Optimism can get, especially given their relatively lesser known names. So if you look outside the blockchain space, I'm sure that not even 1% of people would be able to tell you anything or even recognize the names Arbitrum and Optimism. So DeFi space will be one definitely to follow in the weeks and months to come. The final focus for this week is actually a topic that we haven't yet touched upon in the market updates, and that is the interaction between the blockchain space and sports and entertainment overall. So there's a multitude of very attractive use cases of why sports organizations and sports teams would go into the blockchain space, whether that is tokenization of their assets, whether that can be ticket sales through NFTs, whether that can be releasing fan tokens or having certain sponsorships. So fan tokens, of course, have been a very hot topic in 2021, with the majority of football teams actually, at least the bigger, well-known football teams, releasing a fan token and pretty much allowing fans to be involved in the team through tokenization, through these kind of assets. In terms of sponsorships, we've seen that the crypto space have been all over sports overall, whether that be in the Formula One, whether that be actually sponsoring football teams on their T-shirts. And most notably, recently, it's actually Algorand, which is an extremely interesting blockchain. That will be one of the main sponsors of the World Cup that's happening at the end of this year in 2022 in Qatar. It will be very interesting to see how much more traction Algorand can gain based on this sponsorship. And crypto overall, of course, it's great to see their presence in these more traditional industries, especially sports and entertainment. Where we can see also that there's a clear traction in the sports realm is through NFT sales. So one big example and one of the more trending topics at the moment are capturing and encapsulating moments in sports through NFTs. So one clear example recently that has gained a lot of momentum also since the start of the NFL season is NFL All Day. NFL All Day, what they're doing is they're allowing people to buy historic NFL, so American football moments, through NFTs. And that's actually becoming extremely popular. It's something that was done also in basketball and NBA. And I'm sure that as a traditional industry, right, with collecting cards and collecting historic cards of players and moments of certain games, this will very naturally also transition into the blockchain space, as we've already started to see. This is a very, very early stage of this kind of space, and we only expect this to grow massively. We know how big as an industry the sports industry is, and how big sports collectibles and actually collecting and trading cards can be in the sports industry. And therefore, in the blockchain space, this will naturally transition as well. Will be very, very interesting to follow this and to see what happens overall. That was all for me. Thank you very much for listening, and I'll see you all again next week. Take care.